I tried Warren Buffett's investment strategy for 1 year. Here's what happened. What's up, everyone? Welcome back to the channel. So, here's the deal. Warren Buffett is considered one of the greatest investors of all time, right? I mean, the guy turned a couple of $1,000 into $100 billion, so I thought, why not try his strategy for myself? For the past year, I've been following Warren Buffett's investment strategy exactly as he recommends. And today, I'm going to tell you exactly what happened, what worked, what didn't, and if I'm now on my way to becoming the next Buffett. If you've ever wondered if Buffett's approach actually works in today's market, stay tuned. Let's dive into the journey of trying his strategy. 1 year, one strategy, tons of lessons. Step 1, understanding Buffett's strategy. Before we jump into my results, let's break down what Warren Buffett's strategy actually is. Buffett's approach is built around a few core principles. First, he only invests in businesses he understands, no complex stuff. He's big on value investing, buying stocks of companies that are undervalued but have long-term potential. Buffett also likes companies that have a moat, a competitive advantage that protects them from the competition. Think Coca-Cola or Apple, companies that have been around for decades and show no signs of disappearing. And perhaps one of the most famous aspects of Buffett's strategy is his long-term vision. He doesn't buy stocks to sell them in the short term. He wants to hold onto them for decades. Step 2, my investment process. So here's how I tried to implement Buffett's strategy. First, I started by selecting stocks that I understood, things I use, see every day, or can easily wrap my head around. For example, I chose companies like Coca-Cola, Apple, and Johnson & Johnson. Second, I focused on finding undervalued stocks with strong fundamentals. I looked for companies that had low price-to-earnings ratios and were trading below their intrinsic value. Basically, I hunted for bargains. I also made sure to research the business, what it does, how it makes money, and whether it has a competitive edge. Then I applied Buffett's golden rule. Buy a business, not just a stock. If I was going to invest, I wanted to believe in the company's future. Now, for the most part, I followed his long-term approach. I didn't sell any of my positions unless there was a major shift in the company. I was in it for the long haul. Step 3, the results after 1 year. All right, here's the big reveal. After 1 year of following Buffett's strategy, here's what happened with my investments. I started with a small portfolio of about $10,000 spread across 4 stocks: Coca-Cola, Apple, Johnson & Johnson, and Berkshire Hathaway. Over the past year, the stock market was a bit all over the place. We had some ups, some downs, and even some crazy volatility. Here's the kicker. My portfolio outperformed the market. While the S&P 500 returned around 8%, my portfolio grew by 15% in just 1 year. That's $1,500 in gains on a $10,000 investment. Now, that might not sound like a huge win, but when you're investing like Buffett, it's about slow and steady. And I learned a lot of valuable lessons along the way. Step 4, what worked? Let's start with what worked. Buffett's strategy is not about gambling or trying to chase the next big thing. It's about focusing on solid businesses that are built to last. The stocks I picked, like Apple, have been solid performers. The reason Buffett invests in these companies is because of their strong brands, consistent earnings, and ability to weather market storms. The key takeaway here is stick with what you know and focus on quality. No crazy risk-taking. This strategy helped me stay calm even when the market fluctuated. Step 5, what didn't work? But not everything went according to plan. For one thing, the timing of my investments wasn't perfect. Buffett often talks about investing for decades, but in a single year I wasn't able to see the true power of long-term growth. For example, Johnson & Johnson didn't perform as well as I expected. While it's a solid company, some of its stocks lagged behind other sectors. I found out that even with Buffett's strategy, you have to be prepared for some bumps along the way. Also, I realized that patience is key. As a newer investor, it's hard to sit back and wait when you see your investments dip. I had moments when I questioned whether it was worth sticking to Buffett's long-term philosophy. Step 6. What I learned and final thoughts. So, after a year of trying Buffett's strategy, what did I learn? First, I learned that investing in companies you understand really makes a difference. It's not just about numbers and charts, it's about believing in the business. Apple, Coca-Cola, and Berkshire Hathaway. I actually use these products, and I understand how they make money. Second, I learned that patience is everything. I didn't make massive returns overnight, but sticking to the plan helped me grow my wealth slowly but surely. This isn't about chasing quick gains, it's about building something that lasts. And lastly, the power of compounding is real. With Buffett's long-term strategy, even small, consistent gains can add up over time. I'm already excited to see where I'll be in 5, 10, or 20 years if I keep following this approach. Final thoughts, try it yourself. So there you have it. Warren Buffett's investment strategy works. It's not a get-rich-quick fix, but if you're in it for the long haul, it's a solid way to build wealth over time. I'd highly recommend giving it a try. Start small, be patient, and invest in businesses you believe in. If you enjoyed this video, don't forget to like, subscribe, and comment below. Have you ever tried Buffett's strategy? How did it work for you? Thanks for watching, and remember, invest wisely and be patient. See you in the next video.